Hey, what's up guys? In this video, I'm going to share with you two strategies that have helped me to pass the Ftmo challenge and to pass many other prop firm challenges to become a multiple prop firm trader, doing this full time and enjoying all the benefits that come with being a funded trader. Before I get into the charts, I'd like to share with you what works for me. I got this up here just to showing you that I actually passed, and here's my certificate. And let me go ahead and go to the charts. But before I share with you what has helped me to pass these challenges, I should talk about the things that will hinder your chances of passing. And the first thing is poor risk money management. Risking too much is definitely a fast track way to blow up. I don't like to risk more than 1 or 2%. I don't like to risk too little either, because then if you catch a really good trade and then you look back at it and you're like, man, I could have gotten halfway to my challenge, passing it, if I just risked 1% more. So I like to actually wait for the best high probability setup, go with a good amount of risk but not too much risk, and let your trade play out. A lot of times, and I used to do this too, a lot of people will catch a good trade and they'll close it out too soon for a small win, and then they'll overtrade. That's the thing I want to talk about next, is overtrading. So what I like to do to pass challenges is not to scalp. I don't like to scalp too much. I may do a couple scalps in the beginning of the challenge, but that's just to build a little buffer for the big trade that I like to go for. I like to go for a long running swing trade. Sometimes I'm just holding it for the whole day or maybe a couple days. But with most of the prop firms, you can only day trade. Before I show you the strategies that I implement, the last thing I'd like to talk about would be revenge trading, and over trading goes with that as well. So if you wait and you wait and you wait, and you finally get your setup that you like, you take it, and it doesn't work, and it's a loser, and you get stopped out, you take your loss. The problem with that is most people don't have the discipline to wait for the next best setup. They will go ahead and jump right back in, which makes no sense because you were just wrong, and there's no need to be jumping back in. You need to do your analysis. You need to wait. You need to cool down your emotions. Most people can't do that, and I've learned this from personal experience myself. Had to set rules on myself, so whenever I take a loss or even a couple losses, I close the computer and I don't come back for at least an hour, or even sometimes for the rest of the day, because my analysis was wrong. So for instance, say I'm trying to buy the dip, right? Okay, the market has been trending down, and you're trying to be a person to find the bottom, which can be very lucrative if you catch it at the right time. Let's say you buy it here and you're holding, and it comes down, and you're disappointed. It comes down. You're hoping to catch this big ride up, and you either break even, or you take a small loss, or you take a small win, right? And then you immediately jump back in, and you do it again. You lose, and you lose, and you lose, and then you realize you were being over eager and jumping in too soon. You didn't wait. You were emotional, and here's the trade you're looking for the day. You could have caught this. You could have rode through all these little pullbacks, and you could have passed your challenge or get halfway through your challenge. That would have been great, but instead you were over emotional and you got in and you took too many losses. Okay? So another thing I want to talk about is you don't want to catch the falling knife. It may look so tempting, and all the counter trend trades look the most tempting because they're risking the least amount of money to make a high amount of reward. But when you're doing a counter trend trade, your probability is a lot lower, okay? Because the probability is you're still going down. You're still going down. So what I do is, you don't want to catch the falling knife. You want to look for signs of momentum going at least sideways for a bit, okay? So it's got to go down. It's got to go sideways. And this is my 200 moving average, exponential moving average. I like to see it hit that a couple times before I actually think about my reversal trade. Okay, this is a reversal trade strategy. Okay, As you can see, in a bear channel, it comes down, hits once, twice, 3 times, and then it does an exhaustion move. It goes down a lot more. And then you're way below the 200 exponential moving average. You see it going sideways. And you know that big money has been waiting for this opportunity. And this is where you want to get in, is when the big money is starting to get in. And they know that day traders are looking to get in around this time. The technicals all line up, and we're all going through the same process of waiting for the technical setups to pop up. So the big thing is, don't get in on the falling knife. Wait for the technicals. And I like to look right here. See, this is a 1, 2, 3. This is the daily chart. This is a 3-day pullback on the NASDAQ 100, so to be the US 100 on Forex on the Ftmo. Every time there's a 2 or 3 day pullback, there's always a surge up. Okay, almost all the time. So if you're trying to pass an Ftmo challenge, you're not starting the challenge right here. You're not starting the challenge right here. You're not starting the challenge. Look at all these days. You have to wait. Unless you started the challenge right here or right here, this is the perfect time right here. Okay? You're waiting for this big move down, major support, double bottom. The technicals all line up. So you get your technicals lining up. Then you start the challenge. You have to be very patient before you jump in and buy a challenge, okay? You don't want to be buying challenges just because you want to make the money now. You have to. When I start a challenge, I've been waiting sometimes weeks, to jump in and take the plunge. So you got your triangle. The pattern has broken out of the trend line and it's moving up, okay? And there's a good small resistance right here. There's the good chance that it's going to blow right through that. And it did. So if you bought the Ftmo challenge right here, this is the daily chart, you put on one lot. You don't want to try to put on two and say, well, I want to pass it quicker because I know that it's going up. It's a good high probability that it's going up. You buy one lot or even 3/4 of a lot and you just hold for 1, 2, 3, 4, 5 days. You already passed. Okay, look at all this. This is 100, 200, 300 points. Okay. Then you get up here, it's another 200 points. That's 500 points. 500 points with the NASDAQ for 100 points is $2,000. So you do 500. That's 10,000 right there. You're passing 100K a challenge just like that. Okay. If you do a half a lot, you don't want to see your max daily on any of these days even get close to your max daily loss. You put on a half a lot and you just ride it for a little bit longer. You're still passing, but you got to hold it for a couple more days. This is the thing. You don't close out when you've waited for your good setup. You don't close it out for a small win. You don't scalp. Don't scalp 1, 2, 3, 10. Thinking, okay, I'm just gonna scalp all day because I'm gonna buy dips all day. You can do that. It's more stressful. You have to have the discipline and the belief that your analysis is going to play out, and you hold it for these days. That's the easiest way to pass the Ftmo challenge, in my opinion. Okay, you can pass it in one trade, 2 trades. I like to get a couple scalps in, build a little buffer, and then hold. Pass. Boom, you're done. Okay, you don't want to be starting an Ftmo challenge on all these red days. Unless you're a bear, which I don't like to be a bear. I don't like to short. If I do, it's very rare, and I just scalp. Quick short scalp. Because on all these bear days, all these red days, it falls, right? Yeah, for the remainder of the day, the market has been falling. But on these big bear days, there's a lot of bull trends in these bear days. So it's more stressful to try to hold on a 2 or 3 day swing trade in a bear market. So I would not recommend doing that. And I would not recommend scalping. I do recommend waiting for the right time with a small amount of risk and holding for a good amount of time. Even if it's coming up and down, best thing to do, I've learned a lot from Al Brook. That's the only course I've ever taken, and he calls it Walmart trades, where you put on a trade, you put the risk, and you put it far away stop, and you put a target way far away, or you put a break-even offset with the high target and let it trail with the trailing profit take far away from where it is, and you just go to Walmart and you come back 3 or 4 hours later and you check on it, come back the next day and you check on it, you'd be surprised how much money you can make just by doing that. So much better than scalping 15, 20 times a day and being super stressed out because your P&L is swinging all over the place and you're not sure whether to get in or get out or add on or take off. Okay, so that's my number one strategy right here. My other strategy would be to scalp around the open. Okay, you can do that too, and I do that with futures. The open has the most high volatility. Um, what happens is these institutions will take big positions right at the open, and it could swing one direction or the other. So if it goes up 50 pips, then they close out their position. All the people with not so deep pockets, they get shook out of their position, and then they short, or they do the exact opposite. They will buy back at the very bottom after it's been falling at the open, and you scalp. Okay, you can use a little bit of exercise, but you do it with kind of a tight stop. And here's the thing with this strategy: if you take a couple losses, you stop for the day. You don't even let it get close to your max daily loss. Okay, you just own up to it. Okay, I've got the wrong scalp. Maybe I was too eager, and you'll notice that when you do the strategy, if you're wrong, your trades will play out anyways, but your stop was too tight, or the market just moved a little bit too much against you, and then it goes back in your favor. And what could happen is you get too upset and you're pissed off. I knew it was going to do that, but I was too eager. I jumped in too early. So that's the other strategy I like to do. But the very first strategy is the one, especially if you're going to do an Ftmo, because the cost to start an Ftmo are a little bit higher. Some of the other prop firms that I do too, maybe the costs aren't as high, and I will do that with strategy with them. But with the Ftmo, I definitely wait. I've always got it in the back of my mind when I want to start an Ftmo challenge. Okay, so it's like right here. It's been falling 3 days. I'm noticing that there's a little bit more sideways action. Bears are starting to give up. Then you jump in and then you buy an Ftmo. Buy a 50K account, 100K account, and even if you just do a 25K account and get your feet wet and pass one really quickly, and you build up some confidence, get a withdrawal going from their account, then scale up and get you a 100K account, and then after you've already passed a couple challenges and made some money, then you go for the 200K or whatever, and then you do it. So that is my strategy, guys, and I hope that you find it helpful. If you like this video, please like and subscribe, and give me a thumbs up. This is a new channel. I'm going to be doing some streaming every day. I purposely built this channel for journaling so I can get better at my own trading. I am not a guru. I'm just planning on making a channel for my own journaling and growing a community for like-minded traders who like to talk about trading and share tips and all that good stuff. So if you like this video, please like and subscribe, and hope you come back and watch some more of my videos. So thanks for watching. Bye.